During COVID, I decided to take on some risk and invest in SASOL shares. During that period of time, one SASOL share was worth less than the cost of a 2-liter bottle of Coke, so it was a no-brainer to invest in the company. For SASOL to trade at such a low price was insane to see. With that said, I bought some shares and I ended up selling the shares around 2 years later, receiving a massive 365% return on investment. I invested around 23,000 Rand and the total I received at the end of the day was around 107,000 Rand. I ended up selling SASOL at its peak price, and after that the share price fell around 65% and it's trading at around 130 Rand per share today. I don't know how, but I predicted the peak of the share price, where afterwards it just continued falling and going lower and lower. So the question is SASOL a good investment at its current share price? Like some of you might know, I recently started using BROKSTOCK, which is a platform I use to invest in local and international shares, and I recently decided to increase the amount I invest into this portfolio, and the idea would be to grow it as big as possible. Please feel free to use the link down in my description to sign up for BROKSTOCK, which effectively helps me grow the channel, so please consider supporting the channel and signing up with my link. With that said, let's jump straight into it. So I want to show you guys something really important at the end, and it forms part of the financial performance of the company. Like you know, I always advise people to work through the financial statements because this is exactly how you determine whether a company will be a good investment or not. So first of all, the income statement. So we are going to compare the previous half year ended 31 December 2022 with the half year of 31 December 2023. So first of all, if we have a quick look at turnover, we can see that turnover is down from 149 billion to 136 billion. If we have a look at the earnings for the period, we can see that it's down from 14.6 billion to around 9.1 billion. We'll continue on the income statement, and we can see here that the total comprehensive income for the period is down from 18 billion to 6.5 billion. So it's quite a big drop for its net income during the last period. If we go to its balance sheet, also known as its statement of financial position, we can definitely see that SASOL is trying to improve their balance sheet. If we have a look at its assets, SASOL is known for having a large amount of assets, which is mainly focused on its property, plant and equipment. Because it's such an expensive business to run, they own very expensive assets. So we can see that the non-current assets is up to around 300 billion Rand. We'll scroll down and have a look at cash and cash equivalents. So this is very important because this is like liquid cash or cash that the company can use to repay debt, invest in growth for the company, or even pay dividends if they don't generate enough money from operations. We can see that the cash and cash equivalents is up from 35 billion to around 39 billion, which is a good sign. Also, if we have a look at its current assets, we can see that it's up from around 123 billion to around 126 billion. This is looking good so far, so let's have a look at its non-current liabilities. We can see that SASOL is trying to reduce their non-current liabilities. This is simply debt that is due after 12 months or after a year, where current liabilities is debt that is due within 12 months. So we can see that the non-current liabilities is actually going down. But then we get to the problem of SASOL, and it's all about its short-term debt. We can see that its short-term debt has increased from 17 billion Rand to a massive 31 billion Rand. Also, if we look at trade and other payables, we can see it's a massive 43 billion Rand, and trade and other payables is simply money that is owed to suppliers or people that still needs to be paid, which is involved in the main business. So again, we can have a look at its current liabilities, where it's sitting at around 82 billion Rand. This is not the best balance sheet, and let's say, for example, the company stops making profit in the next period of time, they will have to start using their cash to pay for this short-term debt, and at the end of the day, this can be a massive red flag. We'll scroll down to the statement of cash flow and we'll have a look at the cash generated by its operating activities. We can see that again, it's down from 21 billion to 14 billion. Next, if we have a look at cash retained from operating activities, meaning it's the net cash from operations, we can see that it's down from 4.1 billion to 2.6 billion. The reason is that they pay a lot of money in dividends, which is around 6.3 billion rand. If we have a look at its free cash flow, we use our cash retained from operating activities, which is 2.6 billion, and we deduct the additions to property, plant and equipment, which is 15 billion. And at the end of the day, it gives us a negative cash flow of around 13.2 billion rand. At the end of the day, they risk reducing their cash pile because they can't generate enough free cash flow. Unfortunately, Sasol has to invest in their property, plant and equipment because it's such an expensive business to run. So they have no other option to invest in their property, plant and equipment because that is what keeps their business running. We can see that the cash and cash equivalents at the beginning of the period was around 53 billion rand, and it has been decreased by a massive 14.6 billion, bringing it down to 39 billion. At least it's up from the previous year, but again, what happens if Sasol has another bad quarter? It can really be a risky investment, and I'll show you why in just a second. If we have a look at the notes they added for financial performance, Sasol said that their performance for the first 6 months of 2024 continued to be negatively impacted by continued volatile macroeconomic environments with weaker oil and petrochemical prices, unsustainable product demand and continued inflationary pressure. Despite some operational improvements in South Africa, persistent underperformance of the state-owned enterprises involved in Sasol's value chain and the weaker global growth outlook continue to impact Sasol's business performance. This is basically the outlook of the company, and at the end of the day, Sasol is being open with its investors, telling them that we should expect a difficult environment going forward, which at the end of the day means that their financial statements won't look too good. I might be completely wrong, and it comes down to your risk appetite. If you are someone looking for a high risk investment that of course can produce a high reward, Sasol might be the option for you. I focus on companies that create a lot of free cash flow and that has a great management team and some sort of competitive advantage. Although Sasol is a large company and a very important company in Africa, it doesn't mean that they are too big to fail. So it's always worth considering the money that you invest. You should be willing to lose that money or at least stick it out for the long term so that you eventually make a good return. At the end of the day, please let me know what you guys think. Do you think Sasol is a good investment? Are you invested in the company at the moment? Again, I'm open to opinions and I always like talking to you guys in the comments down below. With that said, remember to sign up with my BROKSTOCK link. I'll link it down in the description, and feel free to recommend other stocks that we should have a look at.